But yes, when countries seek deeper integration in areas which economy, obviously the global economy has changed over the last 2.5 decades, 3 decades, they, they look at like-minded countries. In many of these areas, it's not possible to find a global consensus. So obviously FTAs are the way forward, and I think the India-EU FTA and the gamut of subjects it covers is an underlying proof of that. When you enter into an agreement of this sort, both European Union and India see a value in this deal, and therefore we have entered into this deal. To what extent the US has certain views and whether those views are generally shared across the American establishment, we can never be sure of. But I can tell you one fundamental fact, and that fundamental fact is that this deal has nothing to do with the topic that was referred to, which is the purchase of hydrocarbon resources or not buying hydrocarbon resources from one particular source. In the 90s, it was easy to cut off a country from the global value chain. I don't think that is the case today. And we are finding that lesson hard to swallow. I mean, some people are finding that lesson harder to swallow than others. And I think, if I may be very objective, the debate is also happening within the United States. As you are aware, that the Supreme Court even now is considering a challenge which has been made by American stakeholders on the reciprocal tariffs, about the legitimacy of these tariffs and whether they serve the purpose they are intended to serve. We have already signed agreements and opened our markets. What does that? We have been open to them for 15 years plus now, which means we have absorbed the most critical competition and survived. Now,
Exactly.
who are we signing our agreements with? Countries which are extremely high cost, which are demographically challenged, so labor is extremely expensive, and therefore tends to specialize in technology intensive production, most of which we don't do in India. Most importantly, let us use the example of automobiles. We have only reduced the tariffs on a quota basis. It has been opened up for 250,000 cars. Even what we call what is called mid-sized luxury car today in India, the Suzukis and the Kias and, the Korean, Japanese cars, they are below 20 lakhs. That,
Exactly.
I mean, and these guys are producing, with the current exchange rate, these cars are 75, 80 lakhs plus, most of them. So there is no comparison in the kind of geopolitical uncertainty that we are living in. Any agreement that brings certainty on bilateral trade relations, whether for goods and services, gives business the confidence to invest in that location. The world's top investment firms, investment banks, etc., all of them, in complete unanimity, have said that India is one of the best long-term bets.
Hi, welcome to Podcast with Pratim. I have with me Mr. Pritam Banerjee, Head Center for WTO Studies at the Center for Research in International Trade. Welcome, Pritam.
Thank you for having me, Pratim.
Pritam, first question on a lighter note, would you consider requesting the due authorities for redesignating you? I mean, in the days when WTO does not or barely exists.
Well, Pratim, to be very honest, many people have joked about our name of our center, because the WTO seems less and less relevant. But I think they forget one very important point, that besides one country which has violated the three fundamental principles of WTO, including MFN, despite that provocation, no other WTO member state, including all the other member states, have gone on to violate these fundamentals. They have remained true to the WTO principles because WTO continues to provide the bedrock foundation of a rules-based trading order. So, to that extent, WTO definitely still remains a very important, serves a very important function. But yes, when countries seek deeper integration in areas which economy, obviously the global economy has changed over the last 2.5 decades, 3 decades, they look at like-minded countries. In many of these areas, it's not possible to find a global consensus. So obviously FTAs are the way forward, and I think the India-EU FTA and the gamut of subjects it covers is an underlying proof of that. that why we need FTAs to take forward global integration. It's a two-speed system. WTO provides the base, FTAs provides the speed.
Right, right. Yeah, it's uncertain times. Yes, you're right that only one country, but the unfortunate story is that country is the most powerful country. And let us see where it goes. Uh, Pritam, I remember your excitement on the unfinished India-USA deal, trade deal. It was suddenly pushed into the back burner by one and only Mr. Donald Trump. The India EU trade deal will take an year before the nitty-gritties are finalized. I presume it will require parliamentary endorsement in the EU. I'm not sure about India, but in any case, we are confident about Indian side. We think it's from our side, it's done. The question is, any possibility of a spoke in the wheel? Trump administration seemed unhappy that Europe entered the pact when they, quote unquote, are sacrificing for Ukraine. Over to you.
Pratimda, with all due respect, every country, every government will have their own views. I think sitting here in India as academics, researchers, experts, we can only comment on what is good for India and how we see this deal to be important for us.
Right.
So I think in that extent, both these, when you enter into an agreement of this sort, both European Union and India see a value in this deal, and therefore we have entered into this deal. To what extent the US has certain views and whether those views are generally shared across the American establishment, we can never be sure of. But I can tell you one fundamental fact, and that fundamental fact is that this deal has nothing to do with the topic that was referred to, which is the purchase of hydrocarbon resources or not buying hydrocarbon resources from one particular source. We know that the global hydrocarbon value chain, which even the commentator also acknowledged, that the value chain is not just the crude, it is also the downstream products. And the downstream products are widely traded, irrespective of what the source of the hydrocarbon is. So, to that extent, I think there is an underlying need for countries to realize that conflating geopolitics with trade might not always be the optimal way forward in a highly interconnected world. And frustrations of this sort, which were not so, in the 90s, it was easy to cut off a country from the global value chain. I don't think that is the case today. And we are finding that lesson hard to swallow. I mean, some people are finding that lesson harder to swallow than others.
Yeah, it's strange times. You speak anything, you do anything, and someone is saying that we will slap tariff on you. No one has reduced tariffs to this comical proportion.
Once again, every country has if I may add a little bit of nuance, lot of the grievances that the United States has, if you look if one is to be dispassionate and look at it objectively, there are some legitimate concerns that the American establishment, and by that I mean not just the government but the wider intellectual establishment of the US, has been raising, that there is a modicum of unfairness, that certain very other large countries who are dominating the global supply in many areas have used unfair means to acquire their dominance. All of those are legitimate concerns. The question is the medicine that is being administered to rectify that problem more bitter than the problem itself? So I
I mean,
think
whether
that
the
is the
medicine is creating more side effects than the disease.
exactly, it is creating more side effects. And I think that is the debate we need to have in a dispassionate manner. And I think, if I may be very objective, the debate is also happening within the United States. As you are aware, that the Supreme Court even now is considering a challenge which has been made by American stakeholders on the reciprocal tariffs, about the legitimacy of these tariffs and whether they serve the purpose they are intended to serve. So it goes on to show that the US remains, at least a systems-based country with checks and balances, one hopes that we will find some resolution to these problems within the American system itself.
Right. Let's shift focus to India EU. Now, we tried to address a couple of areas. One is, of course, we tried to diversify trade, through which we tried to hedge against our over dependence on US in merchandise trade, also in services. And the other sides are the long-term relationships and in through the investments and, of course, security, which were dealt separately. But we will, of course, try to look at it through the same prism, because after all, it's relations, a trust-based relations that can take you up to that level, security level, right? So the deal we all know, and uh, having said that, there are some people like the, uh, however, comical it may be, but some people like the CPIM who have raised concerns about free trade and etc. Now, we know that these things will become politicized sooner than later. So the question is, to what extent we actually protected our interests, because this tariff line reductions and etc., which you and me will agree are correct actually. There is what's the problem in letting the top end cars which are not produced in outside Europe to come to your country? There are some buyers, so let them enjoy their life. So over to you.
So, Pratim, with your permission, I'll give you slightly longer answer.
Yeah, yeah,
You
sure.
know, and let us look at the economics. Right now, we have been reducing tariffs through FTAs for now close to 16, 17 years. We have had our first spate of FTAs starting 2005 and up to 2011-12. We had these agreements with the Southeast Asian countries, the India ASEAN agreement with agreements with Japan, Korea, Malaysia, and Singapore.
Right.
Now, these are really the core of the low cost manufacturing. If I exclude Japan, and of course, Korea, since the time we signed that agreement with them, have become a more advanced manufacturing, a more higher cost manufacturing economy. But when we signed, they were part of the emerging industrial economies. So, the low cost manufacturing economies who are our closest competitors, the ones, if I may use the word somewhat incorrectly also, we should be most afraid of. We have already signed agreements and opened our markets. What does that? We have been open to them for 15 years plus now, which means we have absorbed the most critical competition and survived. Now,
Exactly.
who are we signing our agreements with? Countries which are extremely high cost, which are demographically challenged, so labor is extremely expensive, and therefore tends to specialize in technology intensive production, most of which we don't do in India. So let's put that as the first context, that we have absorbed the most critical competition, emerged strong from it, and we are now doing FTAs with countries who do not pose competition to most of my industries in terms of cost and other factors. Second, in a large global economy, I have to trade. I cannot say you have to open your markets, which are very important because Europe is a very large market, but I will not do anything in return. I will keep my. So this one-sided deal never works. A deal is a deal. Both sides have to, provide something to each other. So in that context, we have preserved our critical vulnerabilities in agriculture. We have preserved, in many ways, 10% of our tariff lines have been kept out, approximately, which represent sectors where either we have some industrial policy related vulnerabilities or some genuine concerns about impact on employment because of competition. So we have used that 10% space to pinpointedly identify those lines where we might have some concerns. So
Right.
to that extent, you're absolutely right. We have done a very good job in protecting what is vulnerable. Most importantly, let us use the example of automobiles. We have only reduced the tariffs on a quota basis. It has been opened up for 250,000 cars.
Okay.
Why this number? Because even the European, if you have read the European reactions since the agreement has come from their auto manufacturers, the big European manufacturers have admitted that they are absolutely not being able to compete with the small car segment in India. They have no game there. They are in the high end luxury segment, and that 250,000 number represents broadly what the demand might be. Demand projection might be in that segment for the in the near future, and those are cars we don't manufacture. So to that extent, again, I think these criticisms are, without any basis in understanding of trade dynamics, value chain, and basic economics.
Right. I mean, just for the benefit of viewers, you are an expert, but I am just trying simplifying it. In Germany, I saw that the auto worker, the hourly wage was, when I visited some 10, 15 years ago, hourly wage was 28 euros, right? So unbelievable. I mean, their 1 week's salary or a couple of days' salary was equivalent to my monthly salary. So, and second is the auto makers over there are agreement bound with the auto unions to not to produce the top end models outside Europe. So, in any case, they are produced over there. And those top end and the rest of the production of Audis and BMWs are produced over here. Volvos, everything is produced over here. So forget about the cheaper the cars that I use. I'm sure you also are not very above me. So the small cars or the compact cars, I mean, forget about them. They are 10, 15, 14 uh, lakh priced. But these are, we are talking about 50 lakh plus, 1 crore
Yes, I
plus
mean,
now.
even what we call what is called mid-sized luxury car today in India, the Suzukis and the Kias and, the Korean, Japanese cars, they are below 20 lakhs. That,
Exactly.
I mean, and these guys are producing, with the current exchange rate, these cars are 75, 80 lakhs plus, most of them. So there is no comparison. The
There is
clientele
no
for these cars is
comparison. There
very
is no competition. If we also have a widening million class of millionaires and billionaires, so what's the problem in letting them enjoy their life? if if
absolute.
if we can protect our own textiles and etc., or if we can expand the business of textiles. So let us shift from that. CPIM speak is there to handle that. The our wider and broader interest is in the area of investment, the make in India, etc. So how do you see those things?
So, it's a very good question, Pratimda. I think you have hit the nail on the coffin. The main purpose behind the FTAs we are signing with the developed countries is twofold. One is to create competitive market access for our labor-intensive products, the ones which have typically we are being competitive in the global market, and increasingly some value-added products as well. But the other part of it is to attract investment. As you know, many of these economies, given their demographics and given other fundamental economic factors, they are also looking for places to expand their production into. Since the pandemic, many of them have also recognized that putting 70, 80, 90% of their production capabilities in one country is a recipe for disaster. So they are looking out for those geographies which can give them assurance on two things. One, the domestic market has some economies of scale, so they can produce for that economy as well. But then that economy has the fundamental factors of production, adequate labor, etc., that they can use to produce for the world. And in that sense, India is a fantastic location. It has some issues which are unrelated to trade agreements and all of that. This is local issues of our the transaction cost and ease of doing business, which has probably impeded the extent of those investments that would have come in. But these FTAs provide an accelerator. Why? Because now with binding tariffs, you have this binding tariffs, so you have certainty. You know that the tariffs and the regulatory things at the border have been settled by these agreements. Businesses have greater confidence. They know how their goods can move in and out of these geographies. So they can put their value chain based factories in India, and a lot of these multinational companies based out of Europe or with production centers in Europe will look at India as a manufacturing zone, as an investment zone for us, and also in services. Because as you rightly pointed out, that we have an agreement with the European Union. This agreement includes a component on services. In the kind of geopolitical uncertainty that we are living in, any agreement that brings certainty on bilateral trade relations, whether for goods and services, gives business the confidence to invest in that location. So, given our huge strength in services, especially knowledge intensive services, you will see a lot of that investment flow in. And please be mindful that certain European countries like Ireland are also major locations for US based service giants, digital giants. So, those linkages will also come to play. So, what I'm trying to say in short, that this agreement opens up huge avenues, and I think we'll come to it later, but it has defense and security related implications as well, and supply
Yes.
chain resilience related implications as well.
Yeah, I was just, I have lined up a discussion tomorrow with a military expert. And yes, some of the areas that we saw, and I believe Operation Sindoor might have a good impact on that, good leverage. The last question, Pritam, before I leave you, is that the private capex, which has been in discussion, this is not exactly on the trade, but and investment, foreign investment, but the private capex, which has been in discussion, we have seen a lot of investment in specific areas like semiconductor technology, etc. That we are doing very, very. We are handholding actually investments, but the overall private capex is not picking up. Now, one of the reasons, I mean, many reasons cited over time, uh, that they were waiting for the to be sure that the consumption has peaked. They were waiting that the tariff issues are settled. My question, straight and simple question to you, is when will private capex, you believe, will pick up? How soon?
I believe the private capex picking up green shoots you're already seeing in some sectors if you have been following the data. And I know that you have been following the data. And I think in a couple of quarters, you will see it rise. Let us just consider three factors. The world's top investment firms, investment banks, etc., all of them in complete unanimity have said that India is one of the best long-term bets today in the world, bar none. Second, our domestic consumption has remained resilient in the face of many, many shocks since the pandemic. So, the fundamental reasons why you would want to expand exist. Now, in some cases, the capex has not grown either because capacity utilization, because we already had certain amount of invested, capex there. So
There are certain issues like steel, for example, it goes
yeah,
into regular cycles.
exactly. So on the big sectors, you had these issues. I think we are now reaching a situation with, I think by end of 26, 27, early we will reach, where in the major industries that drive capex, we would have reached a situation where most of that capacity would have been utilized, and new capacity would have to be planned, because you are not planning for 27 or 28. The station is long. All businesses will start looking at their 2030, 2031 requirements, and they will have to start investing if they want to stay relevant in this market, and everybody does. But the second, I think, big factor which needs to be considered is that with these FTAs and the concomitant move on ease of doing business, the confidence of businesses to invest will increase. I think people underestimate the lacuna factor of people not wanting to invest because of ease of doing business, especially in the middle segment. The middle segment has often been asking the question, if you are a business manager or a business owner, that what is my return on investment in a 5-10 year horizon? Will this expansion give me the ROI and the trouble I must take to get this ROI? Or can I just invest in the general investment money? I use that money as a fund, and what
Yeah.
returns I can get.
Right.
If that trade-off
The
is better
simplest
for the
answer that
fund
I
and
tell people that why you should or should not do business.
exactly. So if I suddenly feel that this is too complicated, this is a human factor. Okay, I know if I invest and take enough trouble, I'll get 13, 14%. But here I'll get 11%. I don't want that 2 to 3%. Too much
Exactly.
mangajmari, as they say. Bhar
Exactly.
mein jaye. So that bhar mein, and I call it the bhar mein jaye factor.
Right.
If we don't reduce this bhar mein jaye factor, we will have this, challenge of optimally increase my private capex. And that is the work in progress, and that's where states are responsible. If I just might end by saying that a lot of commentators forget that it is not the central government that can do this. This action is with the states. If I'm going to set up a manufacturing unit, if I'm going to set up a warehousing unit, if I'm doing a transport operation, my interface is the state government, not the central government. And that's why, Pratimda, if you see that 90% of my production and exports is limited to 100 districts in this country in 6 states, 7 states, pardon me. So that tells you a story. Why are everybody going there? Think of this factor, Pratimda, that the labor costs in eastern UP, Bihar, Jharkhand, West Bengal, Chhattisgarh is a half of Vietnam. It's lower than Bangladesh. So I have a huge labor cost advantage. Some people will turn around and tell you they are not skilled, but you come to the factories in Western UP, you go to the factories in Maharashtra and Gujarat, who are working there? People from these states. So the skill argument also doesn't hold.
Right.
So, despite this advantage, why are these states not being able to attract the manufacturing investment? I think the story is told right there that the ease of doing business factor is not working out. Till the time these and UP is taking very good steps, we are seeing good development there. UP alone can turn around the capex story if it wants to a certain extent. But the day Bihar, West Bengal, Odisha has been doing well as well, but the day Bihar and West Bengal join this, you will immediately see a very good jump. But that is unfortunately still work in progress.
No, no, I mean, that's the unfortunate side of the story. The West Bengal and Bihar together are 25 crores population. I mean, almost Europe, right?
Yes.
And if they just, but then there are many green shoots that we are forgetting. There are many changes. Sikkim 25 to 30 years ago, Sikkim had nothing. Okay. Today, it's a very thriving state. Assam had 10 years ago, Assam had nothing except those moribund PSU investments. Today, it's really thriving. It's coming up very fast.
Odisha is a very good story.
Orissa, Bhubaneswar city at after 7:30, the whole it used to look like a village. The city used to go to sleep. It was not a city, it was a town, right? So a lot of changes have happened. You spoke about Chhattisgarh. Chhattisgarh had a huge Naxal issue. Half of Chhattisgarh was not under control of the state government. So, but the rest half had good many industries in the
Yes.
mines and metals. So a lot of changes had happened. I often give people a simile, I mean, an example. So what happened was I was traveling by train. So in the good old days, when you cross West Bengal, Dhanbad, etc. So Tata Nagar, up to Tata Nagar, you will see the industrial lights. After that, there used to a huge darkness used to descend. The train used to go through complete darkness. But some 10 years ago, 10, 7, 8 years ago, when I visited Bilaspur, so I saw that throughout that night, my sleep was, I generally have a very light sleep at train. So there were those lights. Okay, so they were disrupting my sleep. So then I said that something terrific has happened. I mean, so anyway, back to where we were. So things, I am sure that the government will not. The one problem that people forget is that the last time had created too much of hype when we saw a boom, and it created too many distortions. So one of them is these singurs that we have seen. People coming and getting frustrated and going back, and then there was a issue of serious restructuring in industry, the mergers and acquisitions that followed after that, huge. So all of that had taken a gestation period for recovery, I believe. And you're right. I mean, say cement. If we see the latest IIP data, so it is cement which is pulling, right? So we will probably see the change the moment auto industry will start expanding, auto aviation, etc., because these are the areas which are new areas. Anyway, thank you Pritam, thanks for sharing your time. You're a very busy
Always a
man these
pleasure,
days.
Pratim. Thank you for having
Next time we meet, I'm sure you will have a different designation.